Hey, what's up everybody? It's Cameron here with themoneyventure.com. Today we're going to show you how to invest $1,000 into the stock market. We're going to cover 3 strategies that you need to have in mind when you invest, and then show you 3 ways that you can invest your money into the stock market. So to start, we're first going to cover the 3 strategies that you need to keep in mind when you're investing $1,000 into the stock market. And the first strategy that we're going to discuss right now is diversification. When you invest your money in the stock market, long story short, you don't want to put all your eggs in one basket. Diversification means that you're spreading out your investments among multiple investments, which could mean different companies, it could mean different asset classes, it could mean different company sizes, different funds even. The whole point is to spread your money out so that if one of the companies is doing bad, your whole investment portfolio doesn't tank with that one company. So here's an example of a diversified investment portfolio. This portfolio I actually publish as well on my YouTube channel. I started it from scratch with $0 on March 20th of 2020, and I invest $50 per week. We started out with an exchange traded fund into the S&P 500 and slowly started building out positions in different investment companies, as you can see. It will become more diversified over time as we add more companies, but it's a quick example of a portfolio that has a handful of different companies along with their growth, percentage changes, and what that might look like for your portfolio. The second thing you want to keep in mind when it comes to strategies for investing your $1,000 is you want to have a long-term mindset. And specifically speaking, the best long-term mindset is to just follow the advice of Warren Buffett himself, and that's to invest forever, or at least 10 years plus. But if that's not you, if you have your money and you're going to be using it in the near future, make sure you at least have 12 to 24 months. And even that is still a little bit short in terms of time horizon and how long you need to invest your money. The third strategy that you want to keep in mind is making sure that you only invest in what you understand. If you're picking individual stocks, then you want to make sure that the companies that you're investing in aren't some complex company that you have no idea how they make money, nor do you understand what the product is that they're making. The point is you want to make sure that you know how the company is making money, you want to know what the product is, and you want to make sure you understand that product. Otherwise, you're taking a lot of risk investing in stuff that you just don't completely understand. Now that we've gone over the 3 strategies that you want to make sure that you have in mind when you're investing your $1,000, now we're going to cover 3 ways that you can invest that $1,000 into the stock market. The first way to invest your $1,000 is to simply pick individual companies. The whole idea is to pick companies that you understand, that you know, that you really like, companies that get you excited, things that you're interested in. This gives you a little bit more skin in the game and a little more excitement in the investment, in your investment portfolio. But because it's just $1,000, your best bet is investing in companies that let you invest in fractional shares. Traditionally speaking, you can only buy 1 share of a certain company at a time, and sometimes, for example, if you're buying Amazon, that could cost a few $1,000s. But if you don't have a few $1,000s, which in this case we're talking about investing $1,000, other companies today now let you invest based on the dollar amount that you have available to put in that company. So now you can invest $5 into Amazon, even though the share price is a few $1,000s. You own a portion of 1 share when you do that. So the first way of investing your money, on where to invest your money, is just pick out at least 5 to 10 different companies that you absolutely love. Make sure you've done some basic research on their finances to make sure that they don't have too much debt, they have a decent amount of cash, they have a good return on equity, and that they're overall growing in their sales revenue. And then split your investments up among these different companies, using a brokerage that lets you purchase fractional shares, which I'll also include a link in the show notes below that shows some of our favorite brokerages that let you invest in fractional shares of stocks. If you don't want to spend a lot of time figuring out which companies might be good investments individually to add to your portfolio, the next option is investing in what's called an exchange-traded fund. An exchange-traded fund is just like purchasing a share of stock, but when you purchase one share of that particular fund, you're buying a basket of potentially hundreds of companies at once. So for example, as we've discussed in other videos, the easiest way and the easiest exchange-traded fund to buy is one that matches the stock market index called the S&P 500, which is a list of 500 of the largest companies that trade in the United States. And when you buy one share of that fund, you can purchase 500 different companies basically. There's other examples of exchange-traded funds that let you invest in different industries, that let you invest in companies that are supporting particular movements. And overall, you can comprise your portfolio of a handful of your favorite exchange-traded funds. And that way you don't have to worry about managing your portfolio quite as much. It's more of a passive investment approach. The third way that you can invest $1,000 is investing in what's called a Robo-Advisor. A Robo-Advisor is almost a mixture of options 1 and 2 that we discussed. What it is the investment brokerage that you have your account at asks you a few simple questions based on your investment objectives. Based on your answers to those questions, they will automatically create a customized portfolio for you that's split up into different companies, different sectors, different funds, etc. And they manage your investments there for you on a passive manner. All that you've got to do is invest the money and let them diversify it for you. I'll also list a few of the most common robo-advisors that we highly recommend in the show notes below as well. Well, there you have it. We've just discussed 3 strategies you want to keep in mind when you are investing $1,000 and 3 ways or 3 places where you can invest that $1,000. The 3 strategies you want to keep in mind is diversification, investing for the long term, and investing only in what you know and understand. The 3 places that you can invest your money, where to put your money, are individual companies by buying fractional shares of stock. The second option is investing in exchange-traded funds. And the third option is investing in modern robo-advisors. Again, I'll include more links in the show notes for some recommended companies, robo-advisors, and funds that you can use to invest your $1,000. Hope this has been helpful. Subscribe to our show if you like the content and give us a thumbs up if it's been helpful. Other than that, we hope all's well, and until next time. For more information on how to invest in the stock market, take a look at our course called You Don't Have to Be an Expert to Invest in Stocks. I'll include a link for it in the show notes. You can also find the course by going to themoneyventure.com and selecting courses.